Hello, hello. Good morning. Welcome to another ES Futures trading stream. This is your host Victor. Today is Thursday, November 30th. It is 8:51 Eastern Time in the US. We just have had PCE PCE was scheduled today at 8:30 a.m. What happened actual? What happened consensus? Forecast 0.3 actually was 0.2. Previous 0.3. So this is good. Inflation seems to be under control. It's not low, but it seems to be in the right path. Okay, from yesterday, this is my market profile chart. From yesterday, something that I can see it right away from yesterday is the volume. Notice how volume was decreasing. Every day, the higher this market went, the lower the volume. Higher prices were not attracting buyers. Some signs of exhaustion of this rally, the current rally, of this impressive short-term rally, are visible. Or I think I am seeing some sign of exhaustion. I guess 2 times this market opened with a gap, right? Or it could have opened with a gap and was just closed. One of those was yesterday, and I believe this day was as well. I am divided here. My focus is divided here. Yesterday we have selling, okay? We have selling, but notice what happened with value. Where value is, okay? Value is overlapping to higher. Okay, price was going lower, okay, but value is higher. Okay? So what I see here actually is buying, even though price says the opposite thing. I'm not saying the market is going to rally, okay? I'm not saying that. Nobody knows what is going to happen. That's one thing. When you trade for such for some time, you understand that you actually don't know what's going to happen, and nobody knows what's going to happen. What we can do, we can think of some scenarios and be prepared to, for something that can happen, right? Try to be as neutral as possible. It is hard to remain neutral when I see a market that is going, shooting the moon, for example, right? It is hard to remain neutral in that environment. The same thing when the market is breaking hard, when there's a strong liquidation, it is hard to remain neutral. From yesterday, I am still watching, or let's see, I still have this breakout, I still have this in my charts, the breakout of this inside day. You have a breakout to the upside. I saw some selling here, but after this day, which was a Wednesday, we have a long weekend. There was a lot of weak inventory, a lot of overnight trade that happened here. I think the market dealt with that on Tuesday, this day, and there's a breakout failure here, you know. The guideline says, go with the breakout of the inside bar, preferable in the direction of the trend. The trend, up to this point, all the trends are to the upside. The monthly has not been established yet, but good also is going to have one time frame higher. We will know that next Friday or next week. But the weekly is higher, the daily was higher as well, so the trade was to the upside. Breakout, but this breakout has failed. You have 2 days range, right? 2 days balance here, perfect balance inside day, and phase got no excess here, no excess here, no excess here, exponentially weak level here. This level was corrected, but immediately again it is so we have another non-excess here. So this non-excess, it was just moved lower. And the thing from yesterday, so one of the things from yesterday is, notice where this low is. It's a very mechanical buying, right? Exactly to this level here. There is some penetration on this range. This inside bar has come back inside. Now has not, right? But it's buying from this level, the same level. The high, now there was excess here. We don't have excess on the upper side. What do we have on the upper side? The 4,600. Just it was sold just a couple hundreds from 4,600. Value is higher, and we had a spike to the downside just before the market closed yesterday, which is this one here. Okay, because you can call it a spike base, distributions, closed or last. The main thing is that this movement happened so late, or too close to the closing, not to have for the market to give us any sign of acceptance or rejection of the movement. Okay, the movement, the final movement here, this spike is to the downside. The market has not had enough time yesterday. Now, opening inside or above the base of the spike is a rejection of low prices. Right? That's the rejection of low prices. Opening down here is accepting, the market is accepting lower prices here. And building value here is that's that would be confirmation of acceptance of lower prices here. Now, looking, every time I am going a little bit deeper, right? Zooming a little bit more and more from the intraday as well, in the same way how this was bought from this level. Notice where this high is, right? This high here. Now, is this hard back? This is not hard back. This reference is old. This is not hard back. This is hard back now after the market has extension to the downside. I guess this was I don't know why I put that there. Oh, it's just a weak. It is just a weak level here. Why I say weak level? All this area, we have 1, 2, 3, 4 times the market was sold from this area. Right? At the end, BOC was here, but this level, I don't consider this level to be kind of to have particular strength. Now, the overnight after PCE, is this a spike? This could be a spike, right? To the upside, because this is overnight high, and J gave us a spike. Now, the market opening below the spike is rejection. or the spike of this overnight session. Okay, that's what I've seen in the very, very, very short time frame. The next thing, if there is a rejection of higher prices here, because it was made in the period that started at 8:30 a.m., I consider, you can consider that traders are already in the market now. And my focus is the base of the spike. Okay, the late movement, the last action yesterday, late in the afternoon, is to the downside. Opening above M or closing these distributions signals rejection of the spike. We don't know yet. We still have one full period. Anything can happen. Now, the next thing here, all of this movement, can you see? This is the overnight. Where it starts, okay? Where it starts. Right, set. Okay, so this low has good also been taken. Now, if the market opens close to this, it will be below or inside the spike, which is a neutral reaction to the late spike. Opening below the spike, opening down here, is the most negative scenario. Opening above the spike is the most positive scenario, and opening inside the spike is neutral. All right, that's for this part. For my micro profiles, I am starting today. I'm starting the update kind of like from the end, I'm starting from micro profiles. Usually, I start here. Okay, this is the monthly, weekly, and daily time frames. Notice what's happening with the monthly. We have, I can say maybe, can I draw a range here? Is this a range? Is this a range? No, but kind of, right? I'm not going to do that because I don't think I have a range here yet. This is just a signaling that the trend to the downside is over. We may have sideways trading here. Having one time frame higher here is another B, could be another B shape here. Notice that this month has no excess in the lower side. We have no excess here. The next reference in the upper side, 46.33. In between that, 4600. Now the weekly. This is very interesting here. I think, I can avoid every time I see this is just too perfect here. Can you see this trend line here? I just place it there. And where this market is being bought from? From this trend line. We didn't have the trend line when the market was down here. We might see something, but every time, the more the market is bought from that level, I think the riskier it becomes. Now, the next reference in the upper side, 46.33, same as in the monthly. Right? I believe I would pay attention to this 45.50, maybe 45.40, something like that. The market buys from that level. What do we have at 45.40 to start? 45.40, 45.40. Look at that. This is a very weak. This is a trend line here. Notice? Did you see that? 44.40. This buy, we had a breakout, the inside day, the base of the inside day coming from this high. Very mechanical level here. As you can see, it has mechanical buy here. The trend is to the upside. Can you see 1, 2, 3, 4, 5 weeks going higher? So the trend is to the upside. I can see a trend here. The market's trending higher in the medium time frame. Now, daily. Oh boy, I got this. First, all the gaps have been closed. All this yesterday, the market finally closed this last gap here. Do we have another gap? The market will have to be way back to last year. There's nothing here. The next level after this high, I believe, is the all-time high, right? Is this one? Is it? Yeah. This high was bought from this high. Can you see? Two highs here. Bought from that high. Now, this rally has 1, 2, 3, 4 gaps. Yesterday there was a fifth that was closed. Before that, I believe here also we had a gap that was closed as well. Okay, every gap in the upper side now is being closed. I'm not saying the next time the market gaps is going to be closed again, but I kind of like some sign of exhaustions. I see that as a sign of exhaustion of this movement, but meaning that the risk is increasing even more. Okay, I have put these red lines here as a reference because this is the base of this breakout here. Market breaks out, takes this range out, this range high out, and then the next time it's bought from that level. Now, what happened before? We have another 4 days range, and this time it was my bad. 5-day range here, right? 5-day range here, breakout again. First time was bought here. So traders do what bulls until it doesn't work anymore. We may have another breakout here, and another attempt to buy from this 40. What is this? 45.80 maybe. Let's just for the sake here. I am trying to. What I'm doing here is this is just part of my homework here. 45.80. Let's do it 45.80 here. Okay. Or it can be sold from 45.80 as well. Either buy. It was bought first, bought second time. Who knows that now maybe it goes to 80 and then it's sold from that. Who knows? But inventory, this rally is just, boy, this is excess. I think my personal opinion is this is super risky. The long side, the market, the trend is to the upside. The risk is extremely high for me here. I have been taking some short the last couple of days my trades were to the downside. But I didn't expect much. That's the thing. Because the trend is to the upside. If I am going to trade against the trend, my trades have to work really fast. I'm not going to give the market any room. Alright? If the trade doesn't work, okay, I take my losses and walk away. Leave to trade another day. And the reason why I do these streams, I try to pass some knowledge that I may have learned from Jim Dalton. And that I found this very useful. Right? I don't say, I don't teach you how, I'm not going to explain how to trade because we all are different. There are people, for example, that can be contrarian, right? If you have, if I have that mentality, if I have that mindset, I will find myself selling, selling, selling breaks, for example, right? Or buying rallies, or the opposite, or the opposite of what the market is doing. In other words, because that's my personality, and if I don't have context, the odds that I'm going to be in the wrong side, the odds that my trades are going to work are really low. Most of the time, I'm going to be in the losing side. So, what I try to do is add context to whatever. If I am a contrarian, I think the market is too high. So the odds that can be maybe late in the session, you're having a rally and I am insisting shorting, the context, putting things in context could mean that I may have some better odds if my short is at the end of the day. The closest to the end of the day as possible. Because there is some odds of the market is going to have some rebalancing there in a trending day. There are other people that likes to be, that have this, scientific mind, that like exactness, for example, that like to think before acting. Yeah. So there are my traits have to consider those factors, right? That my trades are going to be slow. I will need the market. I will need to see the market develop and think what can happen. See when inventory has get too long or too short, or may have upside continuation. But my time frame is bigger. But it all depends on my mindset, on my personality. And if I say, or if I try to teach one way to trade, it is not going to work for anybody, because the odds that somebody out there thinks like me are very, very low, close to zero. The odds that somebody has the same has been raised in the same environment as I was are very low. The odds that other people have the same goals that I have are very low. The odds that all these things combined are the same in other people are very low, close to zero. So that's why what I try to do here is I try to explain the dynamics of the market. The market is not science. There's no science here. Jim says that all the time. Trading is more like an art rather than a science. Because the market is made of thousands of people like me, thousands of people like you, thousands of people, or companies, or hedge funds, another thousand, who knows how many other people that are just investors, corporations, retirement funds, whatever, right? It is made of, what the market is made of, we don't know. But we are humans, and we are not prepared to deal with uncertainty. We want to see something. We want to see a pattern. We are not comfortable, dealing with irrationality, uncertainty, And that's what markets are. There's nothing certain here. The market is here right now. The next second is going higher. The next second it can be down here. We don't know. What type of trading you do or I do could be different type of trading that you do or other people out there does as well. All right. Now, coming back to going back, enough of rambling here. I have this 4500 highlighted because this is a level where I see a lot of activity. If this level fails, okay, I guess I don't know what's going to happen. Today's the last day of the month. End of the month is today. Can you just imagine? Can you imagine the shorts here, hoping for the market to come back, right? Hoping the market to come back here. I just want the market to come back down here, or just down here. It's end of the month today. I think I have this idea that tomorrow is going to be a different kind of day. There's going to be a lot of pressure that is going to be relief. Today. Tomorrow can be a different day. I don't know. I just hope so. And what can happen tomorrow? I'm not saying that something is going to happen, but I don't know what's going to happen. But some of the pressure of this market could be off today, which is the end of the day. Now, going back again. Now, when I have this, another thing that I watch here. I know this is, this is good as well. Rates are falling, bonds are rallying now. The bond market has taken this level, which was a resistance, was support, now is resistance, and with some easy here. Quite a break here. The 30 years still have not done that yet. Crude oil is starting. Look at what's happening at crude oil here. Can you see this trend here? This is just too perfect. Right? Really nice trend line here. These are the conditions for a short covering here. For a short covering rally. Here, this contract is over though. This contract is over. We have another one that is kind of like in range here. Dollar is weakening, and there's some rally. Gold is rallying. Now it's not that far from all-time highs now to make a new high. This is just unbelievable here. It was close to support here. Really close, and we have just incredible short covering rally here as well in gold. All right, it is 19th. What is happening in these markets in the intraday? Dollar, gold falling, crude opening with a gap, bonds are falling. But bonds have taken this low. Come out of the previous day range, coming back inside, targets the opposite side. This is got to be very careful. But look at this. The market opens. Where it opens? Up here. Single print its way out. Wow, this is strong. This is a sign of weakness. Short-term weakness here. Same goes, the 30 now. Okay, I'm going to keep my charts on the side. I want to monitor the other markets while I'm watching the ES. Oh, I didn't know. I didn't check. It has been a while when I checked. Last time I checked the other markets. This is DS. Oh boy, look at this. This is this range here. This is a wider range. This is a Nasdaq. The Nasdaq looks weaker than the. Oh boy, this is not good here. Oh boy. Very narrow days here. The Russell range. Look at the. Well, come on, man! Look at this. This is the down here. This is the down. Another perfect trend, nice, beautiful trend here. You can put this one up here as well. The idea, you got the idea, right? It's perfect here. Short, this is short cover here. What's happening with big tech? Oh, look at Apple here. Oh. What happened with Alphabet? Why I cannot see this? Did it change ticker? Amazon, okay, trend, this is, wow, look at this, new high, all time. Netflix, boy, this is a spectacular short cover here. This is a killer here, big squeeze here. Short covering here as well, Nvidia, my god. Oh my, 923. 923. The overnight. Okay. It seems like this spike is being rejected. We still have 6 more minutes. I don't know if the market is going to open, but if it opens above, this is, this is a stronger market, stronger than what it looks, right? It may break here, but it's that would be just following the price. I know that my risk in the long side is extremely high here, right? But add context, the short term looks stronger than what prices show. We may have another trend day, but the risk of short covering is high as well. That can happen fast. There's no excess here on the upper side. It's a good sign. This is positive. Look at this, well, mechanical selling. This level, very mechanical selling here. So the market has good reasons for a rally here. There was a breakout of this inside day, not inside day, breakout of this range, 1, 2, 3 day range, which is a continuation of this breakout, and the action to the upside has not been completed. Notice here as well, the action to the downside has not been completed. Weak low, weak high. Now, the next thing, the market is opening, or could open, or may open, can open, inside previous day range. Opening inside previous day range advertise chop. The odds of high and rotational day are higher. The closer to the center, the higher the odds of chop. So we want to be very careful here. Overnight POC is pretty much the same as overnight halfback. And all this rally came from seller. Okay. Overnight inventory is 100% long. If there is no counterreaction to this overnight inventory, okay, no counterreaction to the overnight inventory, is a strong market, at least in the short term. Okay. All right, I'm going to take a glass. I'm going to have a glass of water. Come back in a moment for the opening. It's just minutes away.
Well, Jim, you can see these numbers. These are monster numbers, and it's a monster year. It's force, and the transformation has been one of the biggest I've ever seen in software. I mean, the quarter, you can see these numbers. A few companies have ever delivered numbers in software at this size and scale, and not just in revenue, but in cash flow as well.
All right, markets open. Where's volume here? What? Come on, I can't see. Oh, a little bit lower than yesterday. But yeah, kind of like about that. All right, counter-action. You want to see the markets, what the market does here. This can be a counter-action. This is a small counter-action to overnight inventory. Market's being bought from this line. The base of the upper distribution have been closed. Downside spike has been rejected. Lower prices have been rejected. Market is opening inside previous day range, inside value area. I can see some taper here. You know, unless the market, starts selling here, and gets out of this range, that would be a negative sign. Mixed signals here. There could be a lot of chop here in this market right now. Very mechanical low there. What else is right there? Can you see? Can you spot? What else do we have there? Right at this low, value area low. Mechanical trading there. Do you see this taper here? It doesn't mean I am going to buy here. Okay? My decision was, I made a decision. My decision was here. Opening inside previous range could advertise chop. This is a rejection of lower prices. Okay? Put this in context, right? Rejection of lower prices here from yesterday. Most traders have forgot what happened here. This is putting things in context. If you have a long here, for example, this you got that chance. I wouldn't have done that, right? But if you have any reasons, you have something here, you decide to do this mechanical trade from this low here, from value area low, which is actually quite popular also, right? Technicians do this, or retail like to do this, or value area, that's everywhere I buy. I won't expect that too much from that. If I have my really tight stop, if I have something, adjust the stop right away. I would do that. I don't take those kind of trades. I usually let the market settle first. Unless I see change. What will be change is this market. When the market is in balance, for example, right now I can see 1, 2, 3, 4 days balance, right? 11, 22, 27, 28, and 29. That's 4 days of balance. The market is in balance. The market is opening inside that 4-day range. If the market were outside, either to the upper side or to the downside, that's change. Where A high is, where A low is. A high is exactly overnight halfback. Yeah. If you have, this software window trade, the thing window trader is not, is that it's not cheap, but I think it's well worth. You don't have to have market profile software because you can do that by hand as well. But this, I think window trader is the best. I really like this software. Now, I would see these distributions, it's one thing coming down here, opening up here, and another thing is opening down here and coming up here. That would be a better selling, for example, than it is a buying here. I suspect there's going to be some buying coming from this, just before this thing. Let me highlight, or let me put a line there. All right. That's just this type of trading. This is very mechanical trading here. Just one tick from that. One tick. If that gap close, no, if that distributions, if the market reached that low, or that M high, for example, many trades will get out. I see a lot of chop. They also chop today are really high. Now, A low is not good, A high is not good. Did you see where A high, where A was sold from? Exactly. Oh, I had back, right? So I have those or these references not to trade from those levels. It's to monitor the market. I do that to monitor the market because I don't know what. It's kind of like gives me an idea, yeah, one who is in the market, or who can be in the market. And the next thing I start to see what the market is doing, right? If the market keeps doing something, or something becomes clear, I find location, and can find location and take my chances. The mindset, what kind of mindset one has here. If I trade from reference, I'm not saying that trading for reference is bad. That can be some people's style, for example, right? But I know you are going to trade from one reference. Market is coming down here, for example. I buys from this low. If I am buying from this low, when the market is coming low, I expect the market reverse from here. And if it doesn't, I'm not going to wait until the market is down here to close. It's just I close it right away. That's one type of trade. That's putting things in context as well. For every kind of mentality, every kind of mindset one may have, there is one type of trading. Everybody's different. And that's why I think, it's very important. We need to know ourselves, we need to understand market dynamics, and we need to create our own strategy. If I am just going to follow what somebody else says, I will not understand what's the reasoning behind that. Settle, this low, this overnight low, all the selling, all the buying that come from settle. Remember when we talk about this, where this low was, when they see this happen, it's not unusual to see the market coming back to recheck this kind of buying. And all this trade that happened here, all this trade was very mechanical coming from settle. That's the counteraction. This can be a counteraction. Now, I want to see if the market gets out of previous day range. Because if it does, that would be the market getting out of the previous day range in the first period, which is the exception to the rule, right? Yeah. Notice now 1, 2, 3, 4 times buying from this high here. So this level here could be the potential destination. This low is extremely weak now. This now is a weaker market. A weak market than it was before the opening. Let's see if volume comes. I want to see some volume here. Oh boy, this is going to be bad here. This seems like it's going to be so far. What I see maybe here. mechanical buying there, right? Is that the type of trader you are? Well, if it works for you, go ahead. I'm not saying here there's nothing bad. There's nothing inherently bad with being one way or another. So just putting things in context, right? Let's put things in context here. What the market did yesterday, market opened way up here, right? Rally and was sold from that. Traders are doing that again. This level now is almost being repaired. It's still weak here. The market has got out of previous range. This is a weak market now. So traders will be selling rallies. I guess following yesterday's. Oh. Long overnight inventory has been dealt with. Okay, exactly from this level. This level has not been repaired. Huh? Look at this. This is three wide now. This low is still weak here. Markets out of balance relative to yesterday. Again, the market has come back inside this range. You know, the more times the market trades towards this level here, 1, 2, 3, 4 times, the weaker this level becomes. The weaker it is. Notice that there's no excess here. The action to the downside was not completed here, but also there is no completion up here. In volume, when volume is low, but notice this, it may be lower than yesterday, but if it closes up here, it's going to be really high relative to the last, 7 to 8 days, right? 1, 2, 3, 4, 5, 6, 7 days. There's a lot of information here. This could be tricky. Trading is not a science. Trading is not easy. There's a lot of information that we need to be aware and we need to be processing all the time. A high, A low, both are very questionable here. Very questionable, both of them. Any questions? If you have any question, please just let me know. Comments as well. It would be nice to hear somebody else's opinion here. What the heck are you talking about? Every comment is welcome. It's very Oh, also yesterday, this day's low, not where it came from. Exactly, POC, right? Exactly these days, POC. Oh, Saudi Arabia to cut output by 1 million. Oh, that could increase the price of oil. Saudi Arabia 1 million. Russia by orders to cut more. Ah, there's more cuts coming. Huh. Eh, Now this level has been repaired. It's putting some pressure on this one. This market is having downside continuation. Every single reference in the lower side. Now we have the base of the SPY, upper distribution high, a lower distribution high, yesterday's low. Oh, come on, value area low this day? No way. Yes way. Now did you see where the buying was coming from? Exactly from value area low, right? It's a weak buying here. When it came down from this area here. What's happening with crude oil? Is it rallying? Actually, it opened with a gap, but it's coming back. It's trying to close the gap. Bonds are falling. Oh, that's interesting. Bonds are reached Tuesday range actually. We get back inside Thursday range. Alright, nice opening here. Oh, PMI also. Estimate 46. Ooh, it was 55. What? That's a that's a big number there. Core PCE income. Thursday. Chicago PCE, Chicago PMI. Oh, consensus 45, actual 55. Huh. You wanna know? Sometimes I don't even know what these numbers are. But if you wanna know, if you want to know, you got this calendar, right? You have Econo, Trading Economics, and Econo calendar. You just hit in here, and you can read. Have some outlook and the definition. You have it here, and the same thing also in here. Right? read it. This is good, I think. If we are going to be in this business, to know what these numbers are or mean. I don't trade off of that. I try to keep myself away from the news, from the number. I don't care about the number. What I care is what the market does with the number. This level was, as soon as this big level was taken, well, remember we got this gray line. So this level has been corrected, technically it's been corrected. We have excess here relative to this day, and this is not the reference anymore. Now the market is back inside. This is, I don't care about that. I believe this also. I don't care about that. Settle still there. There was probably an upside trend to being established in the way to being established here, but today has, it's a negation of that. We don't have that, because the market has taken this low out. So the potential of one time frame higher or restarting one time frame higher is over today. And remember, today is an end of the month as well. End of the month, weird things can happen at the end of the month. Just try to be aware of that and be careful. These pullbacks can scare the hell out of traders here. This is a very extensive pullback here. Oh, not pullback, rally. Weak market getting out previous day range, and there's quite a significant rally here. The rally has taken more than half of the previous range, or the period's range. This was a counter action. Yesterday, there was a counter all day long. The market did a counter action. Now, it happened really fast. This is a negative market. Now, what are the references on the upper side? If I want to see continuation, I have yesterday's low, I have settle, I have the opening from today, I have overnight hard back. What's after overnight hard back? Which is a high? What happened if a high is taken? Next thing is POC, right? Yesterday's POC, which is about the same as hard back, which is also same as Tuesday high, which is also a weak level. I have a great line there. Multiple periods say from that level. Next thing is right now, opening. I don't see much here. As I say, I like to. I guess I have a view of this market, and feels. I think the trades to the downside now. I still didn't see anything. I'm just forming an opinion because that's the first thing I try to do. The first thing I try to do is, getting seen on the market, understanding what the market is doing. What is today's market doing? That's the first thing. If I don't know what the market is doing, is the market going higher? Is the market going lower? If I don't know what's doing, then what should I do something? I don't, for some weird reason, I have the 63 highlighted. The 63 level, I don't know. Oh, 63 is this low, right? Is it? Yeah, that's it. Yeah. So weird. It took a while around 7. Did you see how this market moved? Was back and forth, buying, selling, buying, selling, buying, selling. Notice that this rally did not have continuation, did not reach the next thing on the upper side was as opening. It didn't reach that. Now then an action started to the downside. And what start to monitor? Yes. This is a very, very, very short time frame, okay? Hold back, settle this level here, and next thing, a low, right? The daily low. I see some kind of taper here. That's another part that is fundamental to trading. That regarding of what time frame you use or what strategy you use or you have come out with is monitoring. Monitoring the market for continuation. Okay, whatever trade, whatever thing the market is doing, you have to monitor if there is continuation to what the market is doing. That's fundamental. It will tells me, okay, my trade, okay, if I got a loss, for example, I should stay. I shouldn't add to begin with, right? But if I have a winning, now we'll tell, okay, I don't see continuation, okay, what I do? Do I close? Do I time my stops? Do I let the market, give the market some room? What? No? My opinion, remember, my opinion is that this is a weak market. This is a weak market, and I think traders will be selling rallies here. Now, selling rallies also can get the market to short. And we are in this trend. We had the monthly, weekly, and until a couple of days ago, daily as well. We're all trending higher. So, and there are some vicious, there were some vicious short covering rallies going on. And today is end of the month as well. End of the month can be quite difficult days as well. Many things, a lot of things can happen here. If you were caught short, there's a lot of calls or naked option sellers here as well. What do you think can happen? Right? They were waiting until the last day to close, right? The closer the market gets to the end. Also, if they haven't closed, the more likely they are going to be closing also as well. That can also trigger, can add fuels, that can reignite some kind of rally. So you got to be very careful. End of the months are not like a regular day. Crazy things can happen. Volume is kind of lower. Kind of lower, but lower than yesterday. Okay, lower than yesterday, but is as high as this one, which was one of the highest. Yeah, actually, yeah, it's one of the highest, as high as yesterday. That can be tricky as well. This can be a counter action. if I am kind of anxious now, anxious to place a trade. One of my rules is if I feel that, I just have made a decision that not to do anything. It doesn't matter if I see something good. If I feel in that thing that I am very anxious to trade, I just walk away. I just don't do nothing. Okay, this can be a big break here. It's going to go without me. That's for sure. I don't like the way how I'm feeling now. I am not relaxed now. I am thinking I got something going on in my life as well. It is having some impact. It's affecting my mindset. So I would just, make the conscious decisions to not to do anything. Well, guys, it is 10:10. Unless there's any question, I'm going to call it a day and wish you good luck and stay safe. Have a wonderful rest of the day. Have a good trading day. Stay safe out there. Bye bye.